Hi, everyone, and welcome to Payments TV today. My name is John Gaffney. I'm Chief Content Officer here. And our topic today is going to be growing merchant services through innovation. We're going to cover how banks and payment processors can provide maximum benefits for merchants, specifically how it enables them to improve relationships with customers. We're going to talk about the impact of various drivers on merchant growth with a focus on grassroots small businesses and larger corporate perspectives. A few words about our guests before I start here. We've all heard of U.S. Bank and its strong focus on digital innovation. Today, we're going to bring in U.S. Bank's wholly owned subsidiary, Elavon. With a broad range of technologies, its payment solutions are tailored to meet the needs of any size business in any industry or processing environment, from transaction processing to risk and underwriting, settlement, equipment, and customer service. Elavon handles every aspect of the acquiring relationship, enabling clients' growth and customer satisfaction. And here to discuss this topic today is Jordan Owen, who is the head of merchant business banking at Elavon. Jordan leads a team of 200 plus within business banking at Elavon with a remarkable track record of driving innovation in the payment space, both in bank-backed institutions and in private equity-funded fintechs. Jordan has also held previously new country expansion roles for the likes of the Dutch payments firm Mali, and has held leadership positions and senior roles at Barclaycard and WorldPay. Jordan, thanks for joining us.
Delighted. Thank you very much for having me.
So I'm very interested to know how a company like U.S. Bank decides to have a wholly owned subsidiary. What was the initial problem, or what's the opportunity that U.S. Bank was looking for that led to the development of Elavon?
Yeah, I mean, I think that why is probably something that still remains very relevant today. And it's something that has been considered by many other banks across the US and across the globe too. So I'm probably not going to reveal any major surprises here, but somewhere around the early 2000s, US Bank identified the growing need to bring banking and payments together. And so the bank acquired Elavon's predecessor, which was a company called Nova Information Services at the time, based out of Atlanta, which still holds a large portion of our employees from Elavon, actually. And it's turned into what we know today as Elavon. And I think if you think about what we bring to the market and what we bring to US Bank as a differentiated part of their portfolio is we are one of only two payment companies that's wholly owned by a major American bank. Mm-hmm. And I think that does fulfill that original vision of bringing banking and payments together. And I think, we service everyone from, major enterprise clients, in the airline space and very complex industries, all the way down to startup businesses, providing services in SMB. So I really do think that why remains very relevant. And if you look at some of our competitors in the market, even fintech and private equity-backed companies, they're very much thinking about how do they extend banking solutions as part of their payment offering, which is kind of a role reversal, right, of what US Bank originally intended to do. So hopefully, John, that gives you a bit of a flavor for the why. Happy to delve into that in a bit more detail as we go through.
Yeah, and before we do delve into the details, I'd like to know, is there a fair amount of excitement around innovation right now in the merchant community? I hear a lot about checkout. I hear a lot about payment processing. I hear a lot about the need to have data. But what are some of the things that you think are lighting it up for merchants these days?
Oh, I mean, a lot. I think that there's an understanding now, twofold probably, right? I think innovation comes in the form of how we interact and onboard customers in the first place. So there's a huge amount of innovation happening at the front end for those onboarding experiences, right? And one of the ways in which Elavon's been investing in that is providing a seamless way to interact with and integrate with our solutions. So developer first APIs, upgrading all of the technology such that it's easy to integrate that into your point of sale lending solution. I think also just bringing other solutions as part of a package that customers can pick and choose as to what they take. And, one of the big developments we've had in the last few years has been the point of sale lending solution that we call Avance. And no other top bank or acquirer has actually fully integrated point of sale lending except US Bank with Elavon and Avance. Even if you look at the likes of Chase and Klarna Fiserv and Affirm, those are more partner-led solutions. And so we fully embedded that into the bank platform for a single seamless integration with that robust product suite. And I think that's one of the things I'm trying to evidence here, which is innovation can very much happen both at the product lens, so actually offering something that's different and differentiated, but also into how you offer that to customers and how easy you make that for merchants and businesses to build that in as part of their offering to customers. So I think when we think about a product first organization, you're really just trying to think about making payments easy for a customer. A very quick example, like that point of sale lending solution, it's got no code or low code and fully headless APIs. So I don't want to get into the technical language here. I know this isn't a discussion with the CTO, but I think that's the kind of innovation that we're excited about.
Yeah, that's very well said. And, some of the innovations can come in improved communication, personalized experiences, better customer service. How do you feel like Elavon's services and products, which I'm glad you brought that in, build stronger relationships with customers?
Yeah, I mean, you hit the nail on the head really right before you went into the question, which is for me particularly. So if I just think about the business unit that I run, I'm very much focused on small business. So why don't I start there? I think small business owners wear a lot of hats. Often when we're prospecting a customer or we're trying to have a conversation with them about their payment need, we're speaking to the CEO because they are both, in the shop running their business, and they're also trying to make all these major decisions about the technology that they use and how much that's going to cost them. And so they're very focused on running the business and trying to grow their business. They're not focused on making sure that they understand all the nuances of the various partners that they need to run their business. And so our goal is to be that payment expert. So how do we enable them to build stronger relationships with their customers? It's just giving them time back would be one of the major ways, right? Give them time back to enhance their offering to their clients. And there are a number of ways we do that. One is we very much focus on customer service. I think that Elavon as a business, one of the probably criticisms of someone like an Elavon is you would say, oh, well, you're a bank-owned acquirer, and so perhaps you're less nimble than some of your fintech competitors. I don't believe that's the case, but even if it were, I think one of the real advantages that we have is our strength and scale. And so we're able to allow our merchants to have a person that they can speak to and pick up the phone with. They don't have to interact with a chat bot online. They can actually speak to someone that can walk them through how to activate and use their products. So that would be one, really, is like really focusing on customer service to give them time back in their day to go and build relationships with their customers. And the second is through the products that we offer. And so, I've touched on this in a couple of ways, which is just making integration and making getting up and running seamless and simple. I also think it's about enabling them in very specific ways in their vertical. So Elavon has taken a very vertical-led approach with our product development this year. We're focused on 6 core verticals where we want to be best in class. And within each of those, we're providing offerings. For example, in healthcare, one of the things that we enable clients to access and practices to use is to be able to send a reminder to their clients that they have an appointment coming up, that they need to pay for their appointment. And so it allows the practice to prevent, losing funds that they may have collected, but it also enables them to have better communication with their customers about, an appointment that they have coming up and make sure that they don't miss that opportunity to interact with them. And lastly, I think one of the things that we need to remember as part of our core reason why we exist, right, is offering payment methods, offering different ways to pay to those end customers for our merchants, and making that hopefully as real time as possible. And so with a product like Avance, which I mentioned earlier, we're providing something that small businesses customers are actually demanding, which is more options for how they pay. And so giving them the real-time financing option can make sense for some of those larger ticket purchases, which, in turn builds that relationship for the merchant because they're never losing a sale. And that's what we're really trying to enable here is, never lose a sale.
Yeah, it's so limited to call you guys a payment processor. I mean, you do so many different things that it does seem to be a very limiting term for you. Interesting. So I read a lot these days about the differences between small businesses and large enterprises. And if you look at some of the news these days, you see that a lot of large enterprises, like, I saw Foot Locker the other day, is trying to merge their online and offline experience. I wanted to know if you see a difference in how you would address each end of that market. What's the difference from Elavon's point of view in how an SMB goes to market and how a large enterprise goes to market?
I've spent nearly all of my career in payments. I've spent a large chunk of that time as well being customer facing. And I think that does give you, and both in the enterprise space and in, upper mid market, and obviously now I run SMB, but I think that's given me the ability to understand both the differences and the similarities. And we talked about the fact that a small business owner that you're speaking often to the CEO. I think that the complexity that an enterprise client demands and needs for their business is obviously much higher than that of an SMB. Typically, the SMB's key preference is to try and make things as simple as possible because they don't have the people or the processes to manage a number of complex different relationships and systems. So I think whereas an enterprise client typically has some of those resources. So I think in our payments offering, a few examples of that, but when you think about online processing and being able to process online transactions, having the ability within your gateway offering to allow a customer to take a preset, checkout page where they can just have the fields ready for them that they can then make look and feel like their website as the customer goes out and selects the product, versus having the ability at the same time to change, enhance, or have a direct connection where an enterprise client can build their own page and spec specific to what they need. Those are the kind of differences that allow you to compete both in SMB and in enterprise. I spoke a bit about customer service as well. I think, portfolio size would obviously be different in enterprise servicing as well as SMB. An enterprise client just needs a different level of attention and support. So we very much look at, the gearing ratio in terms of how many people we would have supporting an enterprise level customer versus how many people we would have supporting a group of SMBs. So I think making sure that everyone has the appropriate level of support and servicing as well as they go through their journey with us. But, this is the bread and butter of our business, which is making sure that we can understand and solve for pain points at different parts of the market. And so over the past few years, we've really been building out those unique capabilities in the target segments. I spoke a bit about healthcare. We made an acquisition of Salutcro last year, and that's very much a play for the enterprise space, right? Salutcro really plays well in those large clients, big hospital businesses and chains, whereas we also offer Rectangle Health through our partnership with Practice Management Bridge to the SMB segment. They offer different things, but they're still both aligned with our vertical strategy of winning, for example, in the healthcare segment. So I could go into a lot more detail about John, but hopefully that answers your question to some extent.
No, that's excellent. I think the point is, though, that these are all interconnected systems, right? And an SMB wants as many payment options, I would think, as Foot Locker, right?
I mean, it does. It does and it doesn't. I think the ability is in tailoring, and I think it's about who the end customer is, the amount of currencies that they want to be able to accept and potentially settle in, the amount of payment methods that they might need, the level of integration support, but also just like the kind of flexibility on some of the processing of the payment types in terms of how they might do subscription or recurring billing is just different to an SMB that may have one profile of customer. They want to sell in US dollars, they want to settle in US dollars, and that's it. So I think really what it comes down to is making sure that they have the optimal setup that enables them to have payments work in the background, right? So that they can go and run their business.
Yeah, it was very well said. Yeah, payments in the background. I love it. So for your final question, I would like you to put your speaker keynote hat on. And let's say we had 500 merchants here for you.
Okay.
What would you tell them about how these interconnected systems and all these services create competitive advantage, number one, and even can grow market share, number two?
US Bank is very much focused on bringing the whole business to the merchants that we serve. And
Mm.
so the way that we want to create competitive advantage for them is by enabling them to access our full suite of capabilities. One of the main ways in which we want to help our merchants be successful is getting access to their funds faster, right? Improving and enhancing and optimizing their cash flow. By being a US Bank customer and by taking US Bank payment solutions with Elavon, you get access to your funds same day. That's just one example of the ways in which being a customer of the whole US Bank entity really benefits and enables customers to be competitive out in the marketplace. And the second thing is, I did touch on Avance. I think this is a great example here. Being a customer of Elavon Merchant Services and being able to leverage that interconnectivity, being able to access something like an Avance, which enables them to access point of sale lending in a very seamless and integrated way. That enables them to sell to more customers that they may not have been able to access or to complete the sale with before. So we're trying to drive revenue and sales for our business, for our merchants on book that they might not have seen, yesterday, the year before that. And it's about helping them to grow their business. So I think those were probably the two things that I would really touch on, John.
Excellent. All right, that's going to do it for this episode of Payments TV. I have been discussing merchant services growth with Jordan Owen, who's the head of merchant business banking at Elavon, which is a wholly owned subsidiary of US Bank. Jordan, thanks so much for joining us.
No problem. Thank you.